The U.S. economy added 57,000 jobs in June. That missed expectations, even though the unemployment rate, it did come in to 4.2%. The expectation was 4.3%. Let's bring in White House National Economic Council Director Kevin Hassett. Director Hassett, thank you so much for joining us. I was just speaking with Rick Reeder of BlackRock, who you knew well, who at one point was interviewing.
Friend,
yes, at one point was interviewing for the same job you were over at the Fed. He basically described the jobs picture as thus: stable, but I would say broadly unimpressive. Would you agree? Unimpressive but stable?
No, I would say that it's on an upward trajectory, that 3 of the last 4 months surprised on the upside, as you know. There were a little bit of downward revisions. This one came in a little bit below expectations, but if you lift up the hood, then the basic story that we think is animating the economy right now is that there's a construction boom. It's the biggest construction boom we've ever had, in part because in the Big Beautiful Bill, we allowed people to expense factory construction. The president talks about all the time about all the commitments to onshore U.S. activity, and that's showing up in construction employment, which was up a lot this month. But the factories have to be turned on before the jobs go back up into the 200,000 range. And so I actually have been a little surprised on the upside by the job market, because it's been north of 100 quite a bit. And because we don't have a massive inflow of illegal immigration, then that makes the break-even job number a little bit lower. And so I think this is a really strong, healthy job market, and that this was a little bit on the other side of expectation, but the trend over 3 or 4 months is consistent with our view that, again, that we were growing about 3%, and that we're going to have a better second half of the year as Kevin, those factories turn on the lights.
You've been consistent on that, but you've also been consistent on this. You were saying this just a month ago. The Fed is behind the curve. Plenty of room to cut. What you're describing does not sound like an economy that needs a cut.
Well, I think that again, what one has to do, and right now, you know, we've got Kevin Warsh there. It's different leadership, and we very much respect the independence of the Fed. I think that Kevin will watch the data and do what he thinks is right, and we'll support him in that. I think that as an abstract principle, you know, going back a month ago on the show or anywhere else I've been speaking, I've been highlighting the fact that the old-fashioned Phillips curve that says if you have growth, you have to raise rates doesn't apply in situations where there are big positive supply shocks. And so if there's a big positive supply shock, you know, like you have an economy with an apple tree, you plant another apple tree, now you got a lot more apples, the price of apples goes down. And with AI basically increasing productivity of firms all across the country, then that's increasing their output. We're seeing it in real GDP numbers, but not putting upward pressure on prices. Now, on the other hand, if you mailed checks to people, as Joe Biden did, then they all of a sudden, you know, open up their mailbox, so they got a few $1,000s, then they go out and spend it, but the supply doesn't go up with it. That's where you get the inflation that we saw.
Well, to be fair, I mean, the president also, I remember getting a check signed by President Trump as well, and we also had the one big beautiful bill, so both parties doing that. But Director Hassett, well taken on your point of Fed independence. I wonder why then you made these comments on Fox yesterday. You basically said that there are a majority of members over at the Fed who are voting not because they're patriotic, but rather because they want to get Trump. Director Hassett, that sounds like trying to sway the Fed or challenging their independence by you as such a big part of this administration with such a senior role, making a comment like that.
We've said over and over that we think that the previous version of the Fed had made a bunch of moves that looked to us to be partisan, and a lot of the people who decided to cut rates right ahead of the last election, to raise rates the minute that Donald Trump was inaugurated, a lot of those people
hang on, Director Hassett. I got to push back because they cut by 175 basis points from late 2024 through the 2025. That doesn't seem like something that's moving against Trump. That's allowing that's giving the White House effectively what it wants.
They're moving towards normalcy, and I hope that they continue under the firm and solid leadership of Kevin Warsh. I hope that they now move into a direction where they're data dependent. I think that if you look back at their history, going all the way back to when President Trump was inaugurated, they weren't always data dependent, and I'm hoping that they re-achieve that status. That's what I was saying yesterday.
Are there certain members of this Federal Reserve that you are in particular concerned about, Director Hassett?
I think it's extremely unorthodox that Jay Powell hasn't dropped out. The former chair sitting there is a very unorthodox thing. It's the first time in history. And I'm concerned about what his motivations for that are, yes, of course. But in the end, this is a problem that Kevin Warsh is going to work out. He's now the chairman of the Fed, and we have enormous confidence.
I was going to say, Director Hassett, just on that point, do you think that the White House needs to get more involved then? Do you think that there should be further investigations around Jay Powell? Should there be methods, much like with Lisa Cook, to see if changes can be made to this FOMC to, again, in your words, remove people who you are concerned that are moving more along the politics and the data?
I think the Fed needs to do its job, and they've got great leadership there, and we're going to hope for the best. We're going to hope for the best.
What about when it comes to Lisa Cook? We had, obviously, the Supreme Court decision saying she can stay on for now. Does the White House intend to push some of these mortgage fraud allegations? Are there going to be continued actions there?
Well, I think we respect the judgment of the courts, and we'll look forward to seeing how the situation evolves.
So does that mean you still are active in this case against Lisa Cook? That it's not necessarily something that the White House is going to back off of?
It's saying that I don't make law enforcement decisions.
Okay, Director Hassett, understood that. I still just, on this point of what the Fed should do and their ability to cut, we had core PCE crawl back up to 3.3% in April. Headline figures get to 4% in May. I just wonder where you see some of the partisan concern, because most people in that position would just pause and wait and not try to push in rate cuts. Well, I just want to know where in the data you're seeing, besides Jay Powell staying on, I understand your point there, where else are you seeing some concerns of partisanship or at least dismay or direct action that seems to be against this president?
None whatsoever since Kevin Warsh has been there. And so we think that we've got the right man for the job there right now. And we think he's going to follow the data and convince his colleagues to do so. And that's our expectation.
What do you make then of Kevin Warsh's sort of approach to not give forward guidance? Do you think that this is welcome? And is the White House concerned at all about market volatility that might arise from that?
President Trump chose Kevin Warsh because he was by far the best person for the job, and I agree with that judgment. If he thinks that the forward guidance isn't useful, and the argument for that would be that it hasn't actually been that accurate, and so people would say we're going to do this, and then they do that, then what use is the forward guidance? I've not done a full academic review of forward guidance and its ability to predict the future, but I know that Kevin Warsh is a person who believes that the forward guidance hasn't been that useful. But in the end, he's continuing it right now, and he'll decide whether he thinks it's a useful communication tool for the Fed or not. That's his judgment.
Director Hassett, I asked you about one Supreme Court decision. I want to finish just on one other one, Trump v. Slaughter, in which the Supreme Court did say that this president administration has more room to let go various heads or various senior people of different independent regulatory bodies within the United States. Does this give you and the team more firepower? Is there anyone else you are concerned about at some of these agencies that you would like to see let go?
The president has built an amazing team of people that I love working with every day. And I think that the Supreme Court judgment is just that within the executive branch, the chief executive has the right to build the team that he thinks he can work with. And I think we've got a team that's firing on all cylinders right now. Whether there's another person that the president thinks that could be changed out and improve the caliber of the team, that's his judgment. But I think that it's an appropriate decision that the executive branch leader, the president of the United States, gets to pick his own team.